Hey everyone, welcome back to another FogCutter Live. I'm here with Preston James, founder of Trader's Edge Network. I'm Mike Curtis, and like always, we got a ton to cover. We're going to take you through what to look out for this upcoming week as you're trading and investing in the financial markets. Preston, chime in, say hello. We got a lot to cover like always.
Yeah, a lot to cover. Hello, and it's great being here after a weekend. I was just sitting here thinking for a minute, I don't think the Cowboys lost over the weekend, and then I realized they play tonight on Monday night.
There,
But
you were feeling good.
I was feeling good. Anyway,
Well, we'll see if that carries into tomorrow. So yeah, with the government shutdown behind us, some of the big news this week is we're getting the economic data flowing again.
mhm.
After the record long government shutdown, we're going to start getting more and more of these economic reports. So Preston, why don't we just kind of start there? Of course,
Let's
Nvidia's got earnings this week. We'll hit on that.
right.
Um, but as far as the economic calendar, there's quite a few things coming our way. You pointed out before we went live here that we've got the jobs report, the September jobs report that's coming out on Thursday, and anything else that's really catching your eye.
Yeah, FOMC minutes, and for those that so this isn't an interest rate decision. Basically, these are the minutes, and the government's done this for umpteen years, but the minutes will be revealed of the last FOMC meeting, which was right at the end of October.
Right.
They just delayed that a few weeks for some reason. I'm sure there's a reason for it, but this is where the media can dig in and see things that I guess it just gives time for whatever they decided at the end of
Right.
last October, um, just so it doesn't freak the market out like all at once, I guess.
Right. And I
But
think
it
this
does
one will
carry a high trading impact to the
definitely.
market, and that will come out during market hours on Wednesdays, the FOMC minutes.
Yep, it's 2 p.m. Eastern time, so about 2 hours before the close. And I think this one is going to be watched a little bit more closely than usual because this last FOMC meeting, right? They always release what they're doing, and then about 30 minutes later, the press conference happens, and Jerome Powell was at the podium, and he took some pretty pointed language. A lot of times they're at the podium, and it's just kind of the very plain vanilla, not trying to rock the boat kind of answers. But what he said, referencing the last FOMC meeting of the year in December, was he said, hey, a rate cut is not guaranteed. And then he said, far from it, as I think is kind of how he phrased it, which
Mm.
is pretty bold language. And he mentioned that I think there's 19 or 17 sitting around the table of the people in the room as they're kind of working through these decisions. And a lot of them had really differing opinions for what to do in this final meeting of 2025. So I think, the minutes can give a little more insight on some of that discussion on what was being said or what some of those concerns were. So I think this one will be probably, I mean, they're, like you said, they're always high impact, they're always watched, but this one could have a little bit more insight following up on some of the pointed language that Powell used in his press conference in that last meeting.
No, that's a really good point, Mike. And then, yes, and to add to this, Wednesday before the open this week, housing starts will be
Right.
announced, and I think this is going to weigh a little bit more now too. The administration floated the idea of a 50-year mortgage, and also Home Depot and Lowe's and Target announced earnings this week, so that kind of has a lot to do with the home. So
Yeah, definitely. There's also, as I'm just looking a little deeper in this calendar, there's quite a few Fed governors, Fed presidents that are speaking. So that always can piggyback, right? If there's a lot of attention pulled into those FOMC minutes,
right.
some of those regional Fed governors or Fed presidents speaking, people can really look to pull any hints or clues on kind of what they're thinking or what the tone or feeling might be coming into that last FOMC meeting of the year. And then also, I think consumer sentiments on Friday. So, and we'll start getting as the government catches up, like we're seeing.
Mm.
Usually, the unemployment announcement is the first Friday of the month. Obviously, we're getting this Thursday, November 20th for the September report. So we're going to start getting some of these reports caught up, getting more of the clarity. I don't know how many of these they're going to go back and try to catch up and report the numbers on, but keep a close eye on that. There could be a few things that kind of pop up on that economic front. So
no, that's great.
So
And
P,
maybe go ahead.
no, I was going to say outside of that, there's a little company out there that I think people are going to be paying attention to on the earnings front.
It's called J&J Snack Food. They announced before the open today, and we need to spend the rest of the time dissecting every nuance of the snack food company giant. Kidding, of course.
Yeah,
why don't you reveal it?
Yeah, we've got Nvidia Wednesday after the close. And I think this one, I mean, and everyone's always tuning into that report, that earnings report. It's such a showstopper. But Preston, the last 2-3 weeks, a lot of the chatter, a lot of the headlines has all been based around AI valuation, AI bubble.
Mm-hmm.
And so I think more than ever, like I said, Nvidia is always under a little bit of a microscope. But more than ever, I think people are just going to tune in, and the street is really going to be watching how this Nvidia earnings comes across. Am I wrong on that?
This is the proverbial bull in the china shop, and you need to watch what it does and where it goes next. But of course, earnings are two-pronged. It's earnings are announced, and that's right up to date. That's what just happened in the past.
Mm-hmm.
And then during the earnings announcement, and a company like Nvidia especially, everyone will be watching the guidance. What did they say for guidance? That means looking forward. And this isn't an analyst, and I'm not talking to you, I'm talking to the audience, because you've heard me say this a million times. This is not the analyst speak or what we call the analyst cartel around here. This is from the Nvidia itself, what it sees going forward. And we don't know what they're going to say. And if you thought you knew what they were going to say, you might be breaking the law, because that's insider information. So it's yet to be seen. And so this happens this week after Wednesday's close. So seeing how Nvidia trades the next time it can trade, which is Thursday morning, that makes this week hugely important for this singular stock to see how is the market trading it starting Thursday morning.
Yeah, definitely.
Yeah,
it's going to be eyes on that. And I was reading at some point last week, the Nvidia CEO came out and said, look, for 2026, we've got like $500 billion of business on the books. So my brain starts doing the math. I think they're expected to report about 60 billion or something like that this quarter. And so my brain does the math. I'm like, well, 500 billion divided by 4, that's 125 billion. That's some pretty impressive projected growth. But then the stock didn't really react to him making that comment. And usually, like we've talked about on this podcast before, and Preston, you talk about all the time, the market's a forward-looking vehicle. So like you just said, that guidance is so important. But what do you think on terms of that, the CEO of Nvidia coming out and saying, we've got all this business on the books? That number is pretty staggering. It points to even more growth into 2026. Why do you think the stock didn't go bonkers on something like that?
Well, it's the $64,000 question, or I guess the $64 trillion question, or whatever. But look, from those tariff lows that we see on the screen from April, this has covered a lot of ground. A lot of stocks have covered a lot of ground. Mm-hmm. And that's the question. What do you think it'll do? I mean, if you were in my doorway and we were talking about this, I mean, my opinion's worth whatever, but what has happened here is there's been a split trade. There has been money coming out of AI names just temporarily. I think it probably continues. I mean, here it's just technically looking just fine. It's right at a 50-day moving average on a pullback, but I don't know. And it doesn't mean Nvidia means it's a bad company or whatever. It's just things in the market tend to get over. How should we say it? Over exaggerated. I mean,
Totally.
things can go to the extremes on the upside, also on the downside, and tend to stay there for far longer than you and I think is logical. But I, and I'm not going to be trading any type of thing on this, but if someone is asking my opinion, I think it gets a little more weak over the earnings
Yeah.
this week. So
Yeah. And
it's
just to this,
tired. I think the trade might be tired.
a little tired, the market in general, right? Instead of being that risk on where it just feels like you tune in the morning and you just see green across the board. Really, the last couple of weeks now, and maybe we could throw a chart of just the S&P 500 up, but we've just seen a little stall, right, in the broad market trend. If you looked at the NASDAQ, it's going to be something similar, right? We went in, we set some all-time highs back at the end of October, and then it's really just kind of been 3-ish weeks of some weakness. We've had a few days in there where it's tried to bounce. But overall, just kind of this pause. And to your point, Preston, we had covered so much ground. The financial news media, they're always going to have to slap a headline on something, right? So
sure,
it can't just be, hey, we covered a ton of ground and profit taking's hitting, right? It's got to be, oh, what's the fear? What's the concern? Or they're trying to give a reason why that some of the selling is happening. And right now, because I mean, and it's not inaccurate either that, some of the money's leaving these tech names and that, like you say, Preston, are a little more full of promise instead of profits. And so it's been really easy to kind of, point it to that and say, oh, what's the valuations? What's the valuations? Are we overcooked in this sector? And just the market in general is just taking a little bit more of a breather. We've seen it in gold. We've seen it in cryptos, right? We've kind of flipped into a little more of that risk off mode for these last couple of weeks.
And let's also add, and I didn't have time to look this up, but I do know there's a real spiky uptrend in the number of searches in Google.
Right.
Are we in a stock market bubble or something related to that?
Mm-hmm.
And Mike, I'll just share this. I did a lot of reading over the weekend on that subject, and we could talk about this for hours, but I just want to share a couple things about this where a lot of this AI growth, like infrastructure and data centers, it's coming out of the cash flows. Like if you take a company like Meta, I mean, if we were in a true bubble, it's just a lot of things just completely getting loose, like build on debt. And
Right.
there is some debt financing this, of course. I mean, that's usually normal and healthy. But a Meta is carving out cash flows that they are producing and then investing in the capital expenditure for that. Anyway, I thought that was a main point. And I also think just in general, just with our the 1929 crash and how we tend to have a pretty informed, and this is built on like many generations now of folks, where I think we have more of an informed investor class, if you will. I mean, if you can, did you know that the margin requirement around that stock market crash in the late 20s was 1%? So we are experimenting with all kinds of stuff, and we've learned from that. And we have a 50% margin now. You can't go leverage your account 99% like you could back in the late 1920s. So we're a full 100 years removed from that. So I think there's a combination of having an investor class, that's dealt with that, it still spooks some people, even though a lot of people from there aren't around these days, or they were like little babies. Um, anyway, like I say, we could talk about this for a lot of time, but just a couple takeaways. I think we've learned from the past, and then a lot of this AI growth is coming out of cash flows and
Right.
not debt.
Right.
So it seems to be very natural and normal. It's
Mhm.
not a bubble, is what I'm
Right.
trying to say.
And a lot of the companies driving that are seeing earnings growth. They are seeing revenue growth. There is, I think Powell even spoke to that point. I don't know if it was this last meeting or the meeting before, but he kind of got asked, "Oh, this AI bubble," and he said, "Well, these companies are profitable." He's like, "These
Right.
aren't where the .com thing. It was so speculative. Oh, maybe this company is going to turn a profit. How many people can they actually reach with this worldwide presence now of being able to scoop up customers from every corner of the earth?" It's just
Yeah.
those were companies, all the valuations were exploding based on the promise and the potential,
Hmm.
not really showing any profits yet. And so, yeah, that's an important point, I think, to contrast, Preston.
And maybe just to add to this, it was revealed as of this morning per government
Mhm.
reports. I guess, do we have the government being back open to show this? But Berkshire Hathaway, Mike, it was revealed how big was the stake in Google. But if we want to flash Google up there, so I mean, this is one of the most cash rich funds, if you will, Berkshire Hathaway, with the genius and the investing guts and brawn. But
Mhm.
them deciding to take a piece of a stake of Google right
Yeah.
now, I mean, if we were truly bubble, would they even be touching this?
Mhm.
Absolutely not. And I will add that Buffett's number two, Munger, Charlie Munger, who passed away 2 years ago, he admitted he was interviewed a lot toward the end, and he was very coherent. And he basically said that Berkshire Hathaway, one of the biggest mistakes, he said, they missed all of Walmart. They missed the Walmart trade, and he said they were late to tech.
Mm.
So they missed all that Apple growth. They missed a lot of that. Even though they have a stake in Apple now, they've been
Right.
peeling back a little bit. But here again, they're late to tech, but they just took a little piece of Google.
Yeah, yeah, it was 4.3 billion. I'm also seeing a 4.9 billion on a headline. So either way, somewhere in
It's
there,
kind of little actually,
for
but
a little nibble for them, but
yeah,
still significant. And we were talking about that a little bit before going live here, and Kyle behind the scenes helped us do a little research about how these stocks tend to perform following a new Berkshire
oh,
investment.
interesting.
And did a few little research, diving in, and we found anywhere from about 11% to 14% at the year mark. So following that investment, the news that just broke on Google, but on average, these new investments, these new positions by Berkshire, a year down the road from that news kind of hitting the wire, it's they typically saw a nice little climb higher. So just something to keep in the back of
Interesting.
your mind. Just the power. Obviously, we're seeing the stock react today on the news. It draws in attention.
Right.
But
And they're
then,
already in. These
right,
reports are delayed. It's not like, hey, I mean, if they come out and say, we're going to buy it, but it's going to be 2 weeks from now, and people are going to raise
right,
it. No, they report it now. This is based on as of
probably
like a couple of
October.
weeks ago or something.
Yeah,
Yeah.
yeah, they were buying it. So yeah, but looking forward, hey, how do these tend to perform? It brings that attention. It brings some peace of mind, I think, for a lot of investors if they see Berkshire taking a stake in that. So
No,
interesting to see how Google reacts from here. So
no, for sure. And I was
awesome,
just looking
Preston.
to Mike. Nvidia just overshadows everything for good reason, but Palo Alto Networks also announces after the close Wednesday.
Mm.
I don't see the need for cybersecurity. I don't foresee that just in the aggregate as being a fad.
Right.
I think that's here to stay. That's just one of the big leaders in that field. I find that very interesting. And then a lot of retailer. Walmart will announce this week, TJ Maxx, in
Mm.
addition to Lowe's, Home Depot, Target.
Yep.
So that's interesting too.
Yeah, a lot that'll give us a pulse on kind of the consumer spending. That's been another little whisper, I think it was Wendy's, I believe, their CEO, they're closing a whole bunch of stores and just talking about the consumer being a little less likely to spend their money. And so I think a lot of eyeballs will be watching some of those bigger retailers on
Sure.
kind of the health of the consumer spending market.
Absolutely.
So
Good point.
awesome. Well, P, anything else? We got a fun client spotlight we want to mention before we wrap this one up.
Well, yeah, just a couple last things in closing. Netflix, I just noticed. I mean, as of today, they reflect the 10-for-1 stock split. Not talked about that much. I mean, it's kind of like a shoulder shrug, a ho hum, but I think it's like a solid money press candidate. I looked up a little interesting factoid on this. Since its IPO, this stock is up. The Netflix and chill. This was an idea whose time has come. Apparently, it's up 97,000% since its IPO. Netflix, just completing a 10-for-1, and completely over here from that is. And I'm not trading it right now. I just noticed the pullback in Dell Computer, DELL. Again, I think for the long term, great. But for trading, it's not ready yet. But what a pullback lately in Dell. This just kind of shows this split market, Mike, we're talking about.
Totally.
This is a big player in the whole AI rollout. And this is the profits coming out.
Right.
And it's finding, the progressive insurances, and it's
Right.
finding very healthy, profitable companies that have really not participated but are perking up right now. But this is that dichotomy that we keep talking about.
Yeah, definitely. Yeah, good stuff. Good insights. Couple to keep an eye on there for sure. So awesome, Preston. Well, great stuff. Let's share. This is from Sean W. We love sharing these. Again, hopefully it provides some inspiration to those that you're maybe just getting up and going. And he sent in this fun story. So we went out for dinner and treated the family for a little shopping to celebrate a successful first month using the money press. Got a nice matching Hawaiian attire outfit for when I reached the 2000
Sean. I'd like to see it.
Yeah, we like to say,
Maybe
hey, when you make your first 250 in actual profits, right? You see the number changing on the screen in your brokerage account. Sometimes it gets a little lost. So we say, pull some cash out, go have a fun dinner, go make it real, go make it tangible. When you hit that 2000 mark, go take a stinking vacation or something, go celebrate it. And so anyway, that's the Hawaiian attire reference right there. Said this first month has been a great learning experience. I was able to overcome a horrible entry on a trade in week 1 and 2. Losing some trades, had some losing trades not recommended by Preston and the Wow Insider.
Hey, he's talking my language.
And still made a profit about 900 on my small account. Moving forward, I'll be more conscientious and using the Wow recommendations, loving what I'm learning so far. Sean, thanks for sending that in. Sure love hearing about your initial success. Can't wait to hear about the Hawaiian vacation so you can put that attire to good use. So
I love it. That's awesome, Sean. I love these. This is like the highlight of my week.
So
One
fun.
of them.
There you go. Well, Preston, thanks as always. Great insight. Hopefully we're helping people carve through some of the noise and chaos out there as you attack your trading week and kicking things off in style. Thanks for joining us here on the FogCutter. Make sure you like this video so you can get alerted when we put these out every Monday and you won't miss an episode. So Preston, thanks as always. Take care, and we'll catch everyone next week.
Thanks for stopping by, everyone.